All right, here we go. It's a new week, and whew, what a start to the week. This was probably one of the best trading days that I've had in a very long time. So, like, very happy with the outcome, and not so much just the whole sort of fact that obviously gold went absolutely through the roof, but just in terms of an actual trading setups and executions, just for myself personally, anyway. Sort of like I was shorting gold from the top. I did short it from like a couple of times moving up, and I caught the highest one that I was trying to jam on there at 21.40 when the what was it? The spread was bouncing up to like five and like 2.3 to five and that, and bang and back and forward and that, and then most of the time I trade through IG and it was closed. Like, I mean, what kind of shoddy stuff is this? So anyone from IG that you do happen to hear, just make sure you let them know as well, because it's a pretty dodgy sort of thing. Like, it was like literally on, off, on, off, on, off, and you just couldn't like sort of add more positions. And I'm like trying to short it, and trying to add more position, more weight. And look, it worked out very well. Like, admittedly, I didn't expect it to explode so fast, so rapidly, so early in the Asia session. Because as you know, sort of like, I give Asia about $5. Normal trading kind of times and that for it all, sort of through Asia session, and it just obviously, yeah. I mean, you saw it. Anybody that was trading it, even if you look back, I mean, have a look on the 15-minute here. I mean, that is just one ridiculous move. And the thing is, with this move, this is stops being hit. Like, that is what it is. It's what's fueling it. It's what kept it sort of driving up, 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 up. And I'll get to it in a moment, but this is the reason that we've sort of come back down here as well. And so the reason that we're now sort of floating around these lower levels here. So there's a bit to unpack with the gold move and that today, because obviously, sort of like, have you been watching sort of what I've been sort of doing on the videos and sort of analyzing and remarking on the last couple of weeks, basically, was the fact that we were coming up to test these all-time highs, these high sort of wick rejection areas that we'd had previously. We had the big sort of close up through this area here, so we knew it was coming. Like, the thing is, all these ones here were high wicks. They got sold down, which is, do have to say, excuse me, that it is looking a little like this here now, just on the weekly. But, it's only Monday. So I don't think we're going to see these kind of repeats. I don't think we're sort of, going to see a $200-300 drop off, unless we do get some incredible move on US dollar. But again, I don't think that's going to happen. So, as I said, I think there's a bit to sort of unpack with it all. But realistically, you got to look at sort of a couple of things. First of all, like we said, like I did on the sort of the weekend wrap sort of review, was that I'm not an Elliott wave kind of person, but particularly I know the theory behind them, and this was very much looking like a middle or third leg of the Elliott wave. And the Elliott wave, basically, they say that the third leg is the biggest leg of it all. So we've got one here, we've got the pullback here, and we've got the third one moving up here. This we've marked out, copied over to here, which gave us that price level of 21.35 or thereabouts in change. And obviously 2050 is a high, so it's clipped, taken that out. But the thing is with it, this is identical to that, so you can expect it to run a little bit further with it all, and so we got it. But that's a very, very sort of big move for one day. Obviously, this is weekly that I'm looking at the moment. So it would stand to reason that sort of like, we could sort of think that this will sort of, unless we do see a complete meltdown, which I don't think we're going to, but, we'll obviously sort of see between now and Christmas. But it would stand to reason that we would probably definitely get at least another attempt up around this level before dying. Maybe not to the very highs here, and I'll get to this in a moment. But this could very much be the middle leg. We could have a bit of a cooling off. It could sort of really sort of come up the top, back around this sort of like 21 plus, 21.20, 21.30 kind of areas. Then a little bit of a cooling off, similar to these pullbacks here, and then we could see a fifth leg still moving forward and take out these highs, and obviously taking out this wick high that we had put in today at 2050, that's going to be our confirmation of the next leg. So I'll just put a little line. I mean, not like we're going to miss it, but that's where it is. And realistically, if we get down onto a lower time frame, I think this will probably a daily, it might look a bit the best on here. We can see that realistically, this was just a flag that played out here as well. So this would be your flag. I mean, this is what I mean, sort of with the charting. You can really cut things a bunch of different ways, and it still says the same thing. Like, as I said, one leg, pull back, next leg. Well, next leg's going to be equal to the first leg, which is this one, but you could also say, well, this is a measured move here. And we've got here, flag, flag breakout, back test, bang, moves up here. Comes up here, 21.38, moves completed. So, people take profit and they sell it down. But I think sort of apart from the fact that, this was obviously a very high move, very quick, people taking a lot of profits, what I really want to sort of say is the profits for long positions today didn't belong to the people that got in. And this is why it's sort of selling down, in my opinion anyway, that you've got this fast accelerated move through here. This is coming because of all these previous, flipping back and forth a couple of times with the charts here. But if you think about it, anybody that's been trading down here, trading down here, trading down here, or even anybody that's been trying to short it, shorting it here, shorting here. Anybody that's been trying to short it on this way up here, textbook stops are going to be above these highs. So put them here, call that one your stop. That's where your stop losses are going to be. It makes sense to reason. Here's a new high, we're going up. If you're short, there's no limit to how high you can go. So, you're not going to really necessarily sort of give it too much room to run. But this is what fueled the first move. Then, of course, there's people who are a little bit more liberal with it, and they're like, oh, no, I'll give it a bit more room. I'll go 21.90. And people above that, round number, 2100. If it hits 2100, I'm out. Bang. All right, next lot of people, a bit higher. Say 2110. These are just sort of fictitious made up numbers, but this is the idea behind it. And if we jump down onto the lower thing, you can see that these are the reasons that as these stops get hit, that propels it up here. These stops get hit, that propels it up here. Not only that, you've got the people that have just been, as I said, over the weekend, they've been doing their sort of, their weekend research, and they've seen, oh, you know what, gold's actually hitting all-time highs. It's about to break out. Wow, this is amazing, and look at the timing that I've got. But the profits for a long position don't belong to those people. The profits for the long positions are the people that got long and have been holding from all the way down here, all the way down here, all the way down here. I mean, you've got to remember, it was only just start of October. So 2 months since we came off the lows, a couple of days shy of 2 months. And we'll come up from 1800. And that accelerated all the way up to, what did we hit today? 2150. 20%. That's $338 in 2 months. You know what I mean? There is a lot of profit sitting on the table for long positions through here. And then you get a bunch of people that sort of hear about it over the weekend, or maybe they've been waiting for the pullbacks and they've just given in to FOMO. And they've gone, you know what, now's my chance and I'm going to buy it. And they buy. And you know what, there's money to be made here, definitely. I mean, you saw how fast it moved. If you buy here, sell here, buy here, sell here, buy here, sell here. That's the way. I mean, this is trading. But not everybody trades like this. And a lot of people would be like, okay, I'll buy this. And, they could say, hey, look, I'll put my stops underneath the lows. And, if it comes all the way back, well, I gave it a good shot and lost out. But you're going to get a lot of people in long positions that are trapped up here now, if they're not already stopped out. And this is why sort of, I started shorting it from I think 20, somewhere in the 20s. I got on a little bit early with a small position. And then I just saw how hard it was going, and boom, 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 and I started scaling my sort of shorts all the way up here. As I said, 2040, I was trying to nail it from here, and IG kept closing their orders. So sort of ring like market is closed, called a thing, and then it's on for a split second, then it's off again. Like you just couldn't get a sort of position on to add more shorts at this level. And not to mention, it was still at a 5-point spread, which for gold, anyone trades gold knows that that's absolutely ridiculously high. I mean, it's normally 0.3, 0.6. So, yeah, that's a very big sort of thing. And particularly when you're throwing on some weight, that's automatically being in a negative position pretty hard. But, anyway, that that's the way it's sort of happening. So you've got all these people jumping on, thinking, "Yep, I'm a gold trader, I'm everything," and they're getting long in these positions here. And what do? They just go, "Okay, I'm going to use all this fuel, and I'm going to sell into it, sell into it, sell into it, sell into it." And all the people that have been long from down here, it's about the time that they take their profits, and it comes up around this zone here, all-time highs. And that's why it's continued to sort of come down and down and down and down, because there's going to be people that are going to be sort of stuck, you know, all the way up here. You know, this level here, this level here, this level here. Because if you jump onto a larger one, if you look at this, that is a very ugly wick. And that is not a wick that you want to be sort of stuck in, particularly at all-time highs. So if they're not already stopped out, they're just praying and hoping that, you know what, for some reason we get a big push rally and it comes up here and, you know what, they can at least get out for even. But every time you tick onto like an IG or a Wanda or any one of these sort of trading platforms, they constantly say, you know, 90%, 95% of people lose money. And they say there's no easy money in trading. And this is an example of it, because people that buy here and think they're a trader and they're going to get out up here. I mean, if they are trading, they bought here and sold here, good on you. Like, I mean, this is what I do. I'm in and out. But, you know, not everybody's like this, and particularly sort of not people that are maybe not au fait with how these sort of markets work and the price structure and all these kind of bits and pieces. They've sort of bought and thought that, you know, when Lambo and it's going to the moon, and it's not going to do this. And so if they're not already stopped out, they're feeling a bit of pain here. And the thing is, it's sort of like if you want to get, and I do believe gold will go up over here, but I think it's going to have a little bit of a churn before it does do this, if not come down even deeper. Because the people that are sitting here are praying to everybody that sort of something happens that rallies up here, they can get out for even. But why would the people that are actually moving these markets want to do this? They've just taken their profit from, you know, 10, 15, 10, 20, sorry, 5, 10, 15% or whatever over the last couple of weeks, months. You know what I mean? They're thinking, well, you know, I've just got out today. I'll leave it a little bit. I'm not in a hurry to sort of buy. I don't want to be buying up in a wick that doesn't get touched again for X amount of time. So I'll wait. And this is why I think at best it'll grind down the lows here. You'll get people that just get sick of the trade. They'll exit their positions. They'll push it down a little bit further, hit some people that can't financially hold these sort of moves through here, and they'll get stopped out. Why would you buy it back here when realistically there's a good chance, I'd say this week you could buy it back at 2036, which by all accounts is still a very high level for gold. You know, that's right up within, you know, not including today, of course, right within 2% of the all-time highs. Why would you sort of necessarily be like, oh, you know, I need to buy back here where we are now, within 0.22% of the all-time highs? I mean, look, it could still go, and I do think we may see little flare-ups along here. To see a new breakout to the next level, I don't think that's going to come straight away. I think we're going to get a little bit of this churn as I've sort of drew over the weekend. As I said, I thought they would have played with it a little bit more and sort of done something like this. Sort of like, you know, fake people in, pull back, fake people in, and then do the sort of trappy push to the downside, get the shorts on, and then sort of ripped it up. That's how I thought today would have played out, but obviously they just took it pretty much as soon as the market opened. But to me, it sort of feels like, you know, there's no reason to necessarily be buying this at the moment. You're seeing a little bit of sort of support in the US dollar. So, you know, that's something that's going to be sort of balancing these things out a little bit as well. So I'm not rushing to sort of add to longs. I definitely will be still adding to longs. I don't think we're going to see a repeat of the previous times that we've had these highs over here. But, you know, again, I could be incredibly wrong. I mean, we've had a very big run here. There's a lot of profit on the table. I just sort of think that there's a chance that, you know, given this wick, I mean, this is a 50, yeah, this is a $60 wick, $60 wick on a 4-hour candle. That's a big wick, and particularly on the daily, it's pretty ugly. I mean, I think this is a little bit too rich to sort of call this a negative divergence, but technically it is, because here's your one high here, and here's one high way up here. And the thing is, negative divergences work when it's not a lot of volume moving the market. And obviously there was a lot of volume moving the market, but this is just more stops and that being hit. And then obviously sort of people have then sort of sold into it afterwards. But yeah, I think it's been an incredible day though. I mean, having this kind of volatility with gold, particularly at any time, but particularly in an Asia session, I mean that's massive. Like, what do we do here? We did, that candle 4% in realistically, it wasn't very long, was it? Yeah, 4% in, call it pretty much these two candles here on a 30-minute chart. That's 4% in 1 hour. I mean, that's huge. I mean, if you take these things, we had a bit of a run into the end there, but you can see that this pretty much covers the whole range of last week within half an hour. Oh, sorry, an hour. So that gives an idea about the sort of the size of this. And the amount that it sort of did get hit with it all. So to me, I think there's a lot of people that will be trapped up here. And I think realistically, if we do go higher, people aren't going to give them a chance to sort of get their money out. That's a lesson to be learned, to sort of, don't jump onto these things and that too quickly if you're not prepared to jump out or use your stop losses appropriately. And they've obviously ripped it back down here. So I think we could potentially see a bit more of a drift and a bit more of a push to the downside here. Probably around 2030s, I'd like to have a bit more of a go. I mean, that's obviously still way up in the top end here, but I think certainly 2060s, I mean, we've seen it was a little bit of support. This is just before Jay Powell started talking on Friday, which obviously sort of exploded it up there, which sort of led into this whole sort of catalyst of this move. I think 2060 would be worth for a little bit of a shot. But again, I'm in and out, so I'm not looking for this to take out the highs. I think realistically, we're going to have a grind along here, grind, maybe drop down, then bang up, move back up like this. So I'm not rushing to get back into gold positions. I got out of everything. I'm actually out of all the shorts as well. So it's been very good. Sort of pretty much, I think it was a week and a half of targets and that in a couple of hours today. So that worked out very well. But regardless of that, it's pretty much how I'm sort of seeing gold at the moment. I'm not going to sort of rush back into this one. We'll flip on to Aussie. So Aussie had a little bit of a kick off the start, but this is another one that I was shorting from the early start part of the day. So I got in a little bit early. I was in, I think, from 70s and then sort of mid 80s or something like this. So this obviously also worked out quite well. And we've seen a bit of a pushback down to the downside here. I'll get into this in a moment because I do believe that sort of we are, I won't say destined, but I think over the next couple of months we are going to see a more valuable Aussie. So I do think we are going higher. But I think the fact that we've got the RBA tomorrow, we've got obviously sort of the market or the economists, even though they're not generally too on it. We've got a lot of them that sort of like saying that, we're going to get a hold and all this kind of stuff, which very much we could. I mean, the CPI came down very hard last print. So, if they are strictly data dependent with it all, are they going to sort of just react that quickly and say, hey, look, it came down, boom, we can pause straight away? I don't know. I really don't know about this one. And this is why I'm a little bit sort of cautious. I'm out of a lot of my Aussie positions at the moment. I did short it down here. As I said, sort of like, I'll get into this in a moment with DXY coming off that support. Was a main sort of catalyst for it all. And also the sort of reason that, that gold was coming down. This all sort of worked in favor with it all in conjunction. Sorry. So, that's pretty much sort of where Aussie is at the moment. We've got the RBA tomorrow. Want to sort of see what they do with it. There is a chance that obviously, it's an expectation that they pause. You've obviously still got to look into how much people spent on Black Friday. And I think it was sort of like 8 billion or something along these lines. And I think the expectation for this was to be about sort of 6 billion or something. So, that's a 33% increase on what the expectations were. So people are obviously still out there spending, and there's a lot of cash floating around. This could weigh into their decision as well, into sort of whether they're sort of thinking, well, okay, yeah, CPI's come down, that's great. It's still at 4.9%, which, their target is 2%. I think they sort of fluffed it a bit now to sort of give them a bit of a sort of leeway in that to sort of go to 3%, but realistically 2% is the target. And you're sort of 2.5 times that still. So yes, we did get a massive drop off, but you can't really sort of be clapping your hands too much, particularly when you've got, the US right on the verge of a 2 handle with their inflation. I think Canada's right down in the 2% as well. Like, we're certainly not leading the charge with it all, and we're far from the job being done. So, do they reward them for one print of CPI coming down? I don't know. Everybody seems to think so, like in terms of the economists. And also, they were saying that the last one that we had was, which I think is utterly ridiculous, particularly that these people are sort of paid to be these analysts, saying that, that was the increase we didn't need. Well, we had three increases of CPI and we had retail figures three times the expectations and we didn't need a rate rise. Well, how else is it going to happen? You know what I mean? Like, anyway, back to the chart really, but so I want to sort of see a little bit more of a cooling with DXY before I sort of think, okay, I want to get that long. I will look to sort of scale a couple of positions coming back down. If we can get around sort of the lower sort of 66s, I will like to sort of get a little bit of a long position sort of started from around here, with the idea that, I actually think that they will raise rates. Obviously, I'll sort of plan and trade accordingly with it, but I think there's a good chance that they will actually raise the rates. That's just my personal opinion and how I'm going to sort of look to trade it. I'm not looking to short it, but even if they do hold rates, I'd expect that, as I said, given what I just said about the figures with the Black Friday, and we're coming into, Christmas holiday season, obviously a notoriously sort of large sort of spending season as well. I think that even if they do pause, it'll be a dip buy opportunity. And I think that sort of like, we'll get the initial reaction of textbook, okay, they, basically they haven't raised. So, they've paused, obviously. And you'll get the textbook reaction where people go, oh, well, let's get away from that, bang. Then I think the talk will come out and they'll say that, look, you know what, we're pausing it now. We're just going to wait to see how it goes. However, we're very strict and finger on the button, yada, yada, hawkish talk. And I think that will make people go, well, okay, they'll pause now. I don't know if they're going to pause next time. So to come the new year, whenever it is, I think it's February or something we have at the next one. I think they're off for January. So similar, I think that the RBNZ had something similar with their interest rate decision last week, where they were sort of saying that, okay, yep, they are pausing, but we are sort of still remaining quite hawkish on it, and we'll raise again if we need to. So I think that sort of if we do get a bit of a drop, I think it'll be short-lived. I think that we'll get a little bit of a bounce up. Hence why I'll be looking to sort of scale a couple of long positions moving down here. I don't think we're about to just all of a sudden fall right over. But certainly I think, while US dollars starting to sort of firm up and find a little bit of support around this area, which I'll jump onto next, I think that sort of that's going to prevent us from moving up a little bit higher. So with Aussie, we are sort of moving back down here. There's not really too much to say in terms of the chart at the moment. I mean, it tried to break out, it failed, and it came back. Okay, that's it. I'm kind of sort of done for my trading for the day, so I'll sort of be getting more back into it through Asia session tomorrow. But a couple of levels that I'd sort of like to sort of target, if we can get a break below, say 33 and a move down towards, as I said, 66 or so, I think that's a fairly good chance for a little bit more of a sort of a bit of a sort of bounce, at least a bounce effort, and sort of a bit of a move back up towards those mid 66s. But I think, yeah, we need a couple of things to happen. We need copper to break out. We need US dollar to break down. And there's a lot of US news coming out this week, which could go either way with that as well. And definitely will probably be a bit of a catalyst. But I think for now, we're not about to sort of break out and go to the next level. So I'm not going to jump into the long positions, just as of yet. Cool. All right. Flip across. We'll do copper quickly because copper was the one that I was, we had the price target taken out. And I mean, I'll toot my own horn with this. Look at that price target. Bang, this, I know it's a zone through here, but this is 95. It's a 20 cents sort of target. And we came right up into the low end, bang, clipped it, second effort, and bang, down. And this is another reason why I was shorting Aussie this morning, because we had this little move put in here, which was, just obviously second attempt up. So I think this was actually the open, wasn't it? Yeah, so this was Friday's session. Up, rejected down, second attempt up, obviously failed to make a new high. Once it went through this little zone down here, then that was our little sell down, and that was confirmation to see more downside with copper. And basically, if you watched what I was saying over the weekend, this is my sort of idea. Again, these are just, for the idea, for picture purposes kind of thing, illustrative purposes, I guess you'd say, but a bit of a consolidation through this zone, in a little consolidation box. And we've seen this. I mean, it's rejected from down here, it's come down the bottom. These are previous resistance supports, and now they're, resistance, and now they're playing supports. So as it sort of pops back up here. So, I mean, we could see a bit more of a further cooling back down to, this sort of lower support, so lower rising support. But I think, yeah, really just a bit of chop sideways. It could actually be right through to the end of the year. Like, there's a good chance, like I know people talk about Santa rallies, and then there's the flip argument of that, of sort of like burn those people and, really sort of rip risk and all this. But I don't know. I think we might actually just have a fairly muted sort of close to the end of the year. But certainly, I think if we can break these levels up through around here, which is obviously quite a heavy sort of resistance, I think this will be the catalyst to sort of see that next leg up in Aussie. And this will come at the same time if we do see DXY sort of break down a little bit further. So speaking of DXY, getting pretty choppy up around here, but certainly starting to find a little bit of support around this zone. And this is the lower zone that we had marked out previously. We've seen buyers have sort of respected this area, and we've seen it today that this is the immediate sort of open, little gap down, tapped into it, and then bang, just exploded back up to the top side. And again, it's gone basically back into its little inverse relationship with gold, whereas we saw gold selling off, well, that money, bang, funneling back into US dollar, and it's sort of kept that supported. We haven't had any sort of major breaks or major sort of, like, even this move through here was quite strong. It's been a bit of a grind. It hasn't really been a sort of, okay, we're going through the top. And again, this is why I'm not looking to sort of say short Aussie, because although Aussie's not part of the DXY, I'm very well aware, it's sort of, DXY is the broad sense of US dollar buying, and the correlation with Aussie, goes in and out, which is great because it gives good opportunity, but, it's still very strong there. So if we see US dollar breaking out, coming through this big falling resistance, which we can move this one down to, say, around this zone here, which be coinciding with the previous highs of this little pump, I should say, but this bit through here, if we could see something to come through this side here, I still don't think I'd be sort of jumping onto it straight away. I think there's a lot of work that needs to be done, but as I said, same with the thing, I've got this little consolidation box. I wouldn't be surprised if we see this just dribble back down, test these levels a bunch of times. Realistically, even if this were to sort of come back up, you're not going to get a V-shaped recovery off this move right here. That's not a bottom that you see a V-shaped recovery on. You see a V-shaped recovery when they punch it down, hit a bunch of stops, drag in a bunch of short positions, and then they push up, and the push up is them squeezing those short positions. They just have unrelenting moves in just one direction, and that's them sort of not giving these people a chance to sort of get out. The opposite of what we're seeing with gold, and this is why I think gold may still have a little bit more downside with it. This is not that. This is not V-shaped recovery stuff. This is more likely just a sort of down, go along sideways, as I've got this little consolidation box along here, grind. At best, make a little base, along here. Here's your down, here's your base, and then maybe somewhere around the end of the year, and this is why I think the end of the year may be fairly muted. You'd have a little base and then come back up. Look, again, I could be wrong with all these things, but this is how I'm trading it. I think that we're going to be seeing a little bit more just realistically sideways grind, which is perfectly fine because, that gives you nice ranges you can pick out and you can get, but if you trade in and out of positions, well, ranges are perfectly fine. I'm not looking to sort of catch something and hold one position all the way through. I'll go in 4 or 5 times and I'll jump out 4 or 5 times in a session. It doesn't really bother me because it's a lot easier to get sort of 10 or 15 or 20 points 5 times over than it is sometimes to catch a 100-point move on an Aussie. So you keep your runners for those ones, but it's just not my style of trading. So with this again, I'm not sort of really going, okay, here we've got a bottom. I think this is just a well-known area. We've already sort of picked this out and sort of identified it, and it just came back in again today. So I think a break of these lows, because obviously look, we're just in the start of the week. This could be a top wick for the week, and if we come down, if we break these lows down here, George will put an alert on this. DXY, that's a weekly flip down. Yeah, so it's a weekly flip down. If we sort of take out these wicks here, that'll just be the catalyst to get a bit more of a push down to these sides here, and then we can sort of draw out a couple of other little zones where we might expect to see it, maybe around here or so. But yeah, we'll get to that. Once that alert goes off, I think that's probably a fairly decent area, 102.70, to sort of see another bit of a bounce. I've seen the buyers have supported it here before they got the run up. It's a reasonable effort that you could do this. I mean, even looking at this now, if you exclude this little point down here, this could almost be a little bit of a sort of head and shoulders as well. Obviously deeper, sort of came back down here, so a bit of a sort of choppy sort of head and shoulders. But something, I don't know where you want to put that, but whatever, like that kind of thing with the head and shoulders down here. And if we did this, this would be kind of more or less down to our neckline, and then, well, wherever you give your neckline for, it would sort of give a bit of a measure move. I'd have to sort of clean this. I don't really like these sort of necklines that move like this. I mean, that could actually sort of come right down here, but I don't think that's about to happen. I think, realistically, this could be a bit of a head and shoulders. If we take out this little wick down here, I'll identify it and sort of drill down a little bit onto the lower time frames, and sort of see what can happen. But again, I think it's just really anything that comes down to the zone, I imagine is just going to be bought back up. So if you're trading with Aussie, you know what I mean? As it moves down here, that's fine, get long, but I wouldn't expect 67 to be taken out and held if we can't break this kind of 102.50 level with USD. Just back onto Aussie for 1 second as well. I've said a number of times that 90s are the area, whether it's support or resistance with Aussie, where you'll find trouble. And this is where we were here. So as you can see, 83 to 91, where to get to, came up here into the 90s, clipped it, and bang, back down. It happens repeatedly with Aussie. Like, it never goes through the 90s first time, and it works very well if you're trying to sort of catch a swing to the downside. 90s is a good low risk area where you can take a couple of long positions, see if you can get a bit of that bounce. And again, when you start to sell it, if you want to short from these areas, generally it won't go through the first time. And so we've seen it just sort of show that again one more time. Finally, I'll just sort of finish off with China, because China's just doing the grind, really. I mean, this thing ground for 3 months up here, remember? So, the fact that it's sort of still coming down here, and I mean, still sort of moving along sideways, I think is perfectly within its sort of style of action. I think they just wanted to trade it up here. Okay, let's readjust everything. Let's recalibrate it. Bang down here. And let's just grind along here. Again, get above sort of 717. And I think you could see some bit more of a sort of upside. This price target was for this direction moving down, as was this one down here. So again, I don't think we're going to sort of be seeing too big a sort of recovery moves here. But, this is what we said. This is going to be a really tough nut to crack. This is the weekly support. We can see back here, well, let's jump onto the weekly. We can see previously, this is where all these wicks sort of came into, and buyers stepped up before we saw our big push to the top side over here. So, we expected them to sort of come along here, and this is what they've done. What's an interesting thing here is that we don't really seem, let's drill right down to this, we don't seem to have a bottom wick on this candle yet. This is the weekly. Generally, if there's no bottom wick, you are going to see at least sort of shoot back down and put in a bottom wick. So I'm going to revisit this later in the week, because I do think that we may see this as a little bit of a push up and a push back down. And this goes in line with DXY selling down a little bit as well. We'd be seeing a weakening of the US dollar against the crosses, which is obviously against the yuan as well. And that would sort of give it to come down here, put in a bottom wick, same time that DXY would be testing supports, and then push back up. And again, this is just why I think we're going to be seeing a bit of a range move with everything. And I know I keep flipping back to it, but if you watch what I do, Aussie is pretty much the predominant thing that I trade with gold. But if you looked at my sort of weekend review video as well, this is what I mean with candles. Oh wait, where was it? Was it the weekly? I guess the weekly is still the same, but the daily was the one that I was talking about. When you get these candles that are very full and closing up with these tiny little wicks, they're generally the ones where you're going to see a bit of a reversal play. It doesn't mean it's a top and we're going to come back down here necessarily, but they're ones that and I'd said this over the weekend as well, if you watched it, it's like they're the ones to be cautious of. Because as you see, continuations and that sort of coming down typically. Obviously, this one had a little bit of a wick and tried to move up before taking it out and coming down further. But generally, you're going to see, a longer wick on a continuation because this is on a daily time frame. If you get down onto a lower time frame, that's what is creating a little range for it. So wicks are just ranges. So it went up here, sold back down. Could it go up and break this one? No, couldn't. So, it came back down this way. And that's why when you don't have a wick on it, it's a very small wick, it's a very high chance that you're going to get a little bit of a reversal because there's no range for it to play within to break. So none of that sort of like, here's support, there's resistance, it tests it and then retests it and sort of moves on. So anyway, that's just it from me for Monday. And yeah, it's about it from me. Be back in the morning.